Boomers buy Biden's Bitcoin bill. A crude way of saying Biden's executive order isn't actually quite too old-timely. In fact, it could be seen potentially as encouraging for the industry because what's really going on here is the Biden administration is seeking research from a variety of regulatory bodies to learn more about crypto and specifically around 7 key areas.
Yeah, so let's give a little context here, right? A couple months ago, the news leaked that Biden was going to be coming out with an executive order condemning crypto, potentially spilling the end of everything as we know it, claiming that they're all securities, so this is all illegal or it's banned in the United States. And that's exactly the opposite thing actually happened. It was quite bullish, I think, and certainly compared to what people were expecting. But that being said, they did acknowledge a lot of the potential risks and things that they would like to solve moving forward with this industry. So I think we can just dive right into it.
In fact, we'll break them down, each 7, one by one. We thought we were going to get this in February. Unfortunately, the Ukraine crisis, which of course our thoughts and prayers go out there, delayed that, and now we've seen what exactly this is all about. Starting with number 1 here, protecting consumers. Always a great way to lead. This is exactly the purpose of the regulatory bodies all around the country. And so figuring out where crypto needs to protect the average individual. We're talking about grandma and grandpa all the way to the fresh, innovative, bright minds that are looking to leverage cryptocurrency, making sure that people are still protected. Because one thing's for sure, the industry is very volatile and it's built a reputation for people coming in at the top and losing money, getting rug pulled, scams. We just talked about an earlier ICO getting enforced by the SEC. And due to the regulatory confusion and the sort of wild westness of it all, it's certainly built a little bit of a stigma over the past few years, I'd say, to say the least. Right?
Yeah, we've seen Gary Gensler come out and suggest that perhaps the accredited investor definition needs to be raised to, essentially prevent more people from being able to invest in deals. And so I think along the same lines here, Biden is suggesting that protecting consumers is definitely a priority. That's number 1 because of, as you mentioned, the reason of this whole draft. But number 2 is the other side of it, not only protecting consumer protections and stability, but also protecting the U.S. financial stability. So not allowing the United States financial ecosystem to become over-leveraged on an incredibly volatile asset class that could potentially really have earthquakes around the whole system, making sure that they have sustainable practices and they're properly hedged to prevent against any really crazy fast movements in any direction.
No doubt about it. The idea that Bitcoin becomes a decentralized currency certainly puts the US dollar in a worse position than it is currently the reserve currency of the world. So how that affects our financial economic stability certainly is something that should be researched. And even though they're far from popular right now, Russia, we did see that the legislators over there admitted that there's nothing they could do to stop cryptocurrency. So they actually encouraged its adoption in order to prevent further financial potential instability as a result of not having, actually started to leverage the actual underlying technology. Now, number 3, we're actually looking to address fraud and the ongoing illicit activity that has already been identified. There's certainly no doubt about it. There's plenty of blockchain solutions out there that have supported privacy and full-on anonymity to enable all kinds of new financial services, which may be potentially even designed altruistically to help someone who is, potentially unbanked, to give them a means to get into a banking system. But at the end of the day, certainly bad perpetrators are taking advantage of it. And so it makes sense. How do we do some research into making sure how can we prevent further illicit activity and fraud that's being leveraged in the use of the cryptocurrency technology?
Yeah, you've already seen how the Bored Apes Yacht Club has now begun KYC AMLing the users in order of their advance of their drop of their specific token. You may see increased KYC AML restrictions coming around a lot of these different processes as these permissionless protocols present risks for illicit activity and could potentially allow for illegal activities or money laundering and things like that. And of course, the government wants to crack down on those things, which is one of the benefits of blockchain. No one is safe. This information is there forever. You can track a lot of this stuff, which is, I think, why they're interested in it. Number 4 is that they want to reinforce the U.S. financial leadership, just like what you mentioned. Despite the fact that Bitcoin could present a risk factor to the U.S. dollar dominance around the world, they want to make sure that the U.S. financial system is still a leader, and they don't want to be left behind with new technologies. We've seen how the U.S. economy has grown with Web 2, with tech growing across every industry and dominating the world, and they don't want to be left behind in the crypto space in case it follows the same route. And I think that that's very smart. And one of the main risk factors I think that in the past was presented at the US is that, look, international jurisdictions are more forward thinking around crypto, and the US could be left behind if they don't move quickly enough. And so it's great to see that, at least from the words on the wall here, that they're conscious of that and are looking to actively encourage innovation despite the risk factors they've already identified.
And that's a big deal, because certainly this concept of international, arbitrage, where we give an edge to other countries, that's certainly not something that the U.S. wants to see happen. So that's great news. But also, for moving into number 5, they also do see the value of what this technology is. They recognize that this is a revolution in financial services, and they want to research how can we actually leverage this technology for Americans and potentially for people around the world to access safe and affordable, specifically, financial services using this blockchain technology and cryptocurrency, which I think is fantastic. It means that they're not just saying, how do we regulate an industry? How do we control it? How do we make sure we understand what's going on? But they're actually embracing the fact that we could actually use this within our own government, potentially within our own country, and leverage a better financial ecosystem for all.
Which is also interesting, because this is a little bit contradictory to that idea of creating higher accreditation standards and less access for retail investors, right? Creating affordable and safer financial services is potentially something that would present an opportunity for all retail investors, and they're keeping that in mind as well. So we potentially see a little bit of a checks and balances system in here, which maybe is best in the long run. Number 6, we have that they want to support technological advances. So this is also great. This is embracing innovation. This is the American capitalist model, really in a nutshell, of we want to create a platform and a base layer so that everything can thrive on top of it. And they don't want to stifle innovation in the name of trying to protect everyone, which case everyone loses, because great, you're protected, but you offered no exposure to anything, and now you're behind everyone else in the relative sense. So I think that supporting technological advances and reinforcing financial leadership are really, really important. It's great to see both those terms were included in this executive order.
That's a big deal to do with an earlier point regarding U.S. financial leadership, right? It's the fact that we do have to embrace development and R&D and innovation in our borders in order to keep that leadership position. And that leads to, of course, last but not least, number 7, a hot topic of a federal issued central bank digital currency, aka a digital dollar. We've talked about it many times on the show. If it's your first time hearing, go check out one of our previous episodes where we break it all down. There's a lot that could go into a central bank digital currency. It could be just wholesale, aka in the background. It could be retail, where we're actually able to use it in an everyday sense, like we've seen in China, which already has a full-blown central bank digital currency all across their country. So that makes a pressure on the United States, as well as many other countries around the world that are researching this technology. How the United States ends up leveraging such a use case, that's not certain. Again, this is an executive order around research. So what this is really in a little bit of a way, a bit of a stall, because ultimately we do expect this year probably for the Biden administration to then use this research to come out with some executive order that does potentially have some significant impact on the industry. But meanwhile, we will continue to forge ahead.
So basically, by my count, I've got 3 anti-crypto points here. We've got protecting consumers, protecting financial stability, and preventing fraud, right? So saying that, okay, crypto presents these problems. We've got 3 of those. But then we've got 4 that are pretty positive. We've got reinforcing financial leadership, accessing safe and affordable financial services, supporting technological advances, and more CBDC research. So by my count, it ends up being a net positive for the crypto space.
Your math is better than mine, but that is indeed a majority. I will say, though, that potentially that last one, the Fed CBDC, could go both ways depending on how you look at it. So we might be looking at a clean, in the middle executive order here. So hopefully, folks, you learned something here and you enjoyed the breakdown. We, of course, would love and appreciate your feedback, your suggestions, your comments, your questions. We're always available on all channels. We have a super active Discord community. Kyle and I are on LinkedIn. We're on Twitter. And of course, go check out stomarket.com. That's where all of the latest security token information, from news to trading prices to now reports that you can buy and leverage. It's all there.
So thank you so much for checking it out. Like, subscribe, do what you do, share this to all your friends, and we'll talk to you next week.
Hey, and also lots of giveaways coming. Be on the lookout. Happy tokenizing.